And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where we talk about foreign exchange trading, and also making money trading Forex, which is kind of difficult to do sometimes. Sometimes it's easy. It's kind of the way life goes. Let's go ahead and get into the risk disclaimer background. And here we have the risk disclaimer. I'm in the United States, so I need to say this on every video, just in case somebody just listens to me and decides to get into Forex. This will be a risk disclaimer for that. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I'm also involved in two prop firm challenges right now. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the other part: the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Now, before trading Forex, consider your financial objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, I'm going to show you exactly what that means in just a minute. We're going to go here, and what do we have? We have football today, which is not part of Forex, but it's something that has been part of my life for a long, long time. We have college football starting up today, for Alabama versus Florida State. How about that? As well as Georgia versus Marshall. Well, that's good. That's not good. That's probably going to be the best game of them all. But at any rate, let's not look at that anymore, because I just like to watch the scores these days. I don't get into it as actively as I used to. This is something I'm active in every day, even on Saturdays. So yesterday we placed the trades. Let's look at our trades. Where are our trades? Here they are. Let's see. So we went into the Japanese yen with a little bit higher stake than I should have on that one, and place it up here because we thought Jerome Powell was going to say, hell no, we're not raising rates. We're going to keep them right where they are. We're not cutting rates, rather. In fact, we may raise rates. But he did not say that. In fact, he went in saying, there is going to be a rate cut at some point in time, which the markets loved. Got this big jump right here. Dollar went down pretty quickly. And fortunately, I put in a buy stop, which means that the trade did not get triggered. None of my trades got triggered yesterday, and therefore I did not sustain a huge loss yesterday. So that's why I always enter with buy stops, because it gives the trade a chance to not turn against me. So I do not like market trades, because if I put in a market trade, it'd be bad. I probably would have blown both challenges yesterday. So with that in mind, we're going to get out of that, and we're going to get into what the new environment looks like. I don't think it's really a new environment at all. Let's look at the 2-year bond yields, for instance. 2-year bond yields also took a dive yesterday. Here's the announcement. Went from close to 4% to 3.7%. So that's a mighty big drop in the bond market almost overnight. And this whole run up was anticipating the speech. The thing about trading fundamentals is that the market knows what's going to happen. Doesn't know what's going to happen, but they build in, based on statistics and probabilities and stuff like that, the what's going to happen in the trade before it happens, or before the fundamental event happens. So you're never going to get ahead of the fundamentals on that. I should have traded the chart on this instead of trading what I thought was going to happen in fundamentals, because I'm not a fundamentalist. Because, especially not with the Fed, because the Fed can say whatever it wants to at any given moment in time. Now this, as I experienced in 2022, every time a Fed guy opened up his mouth, I lost a lot of money, because they don't know what they're doing, quite frankly. The dollar versus the yen is still looking like a really good trade, though. based on the bond yields. 2-year bond yield is in America is way down. The rest of them unfazed, but the Japanese bond yield keeps marching upward. So it went up 1.75% yesterday. That's why the dollar yen didn't get killed. Now that I think about it. So let's go to our currencies. Start off with the euro versus the dollar, and here we are. We have the great big dive right there, based on Jerome Powell's speech yesterday. Put it right down here, and it's kind of no longer respecting this trend line. We'll get into trend lines tomorrow and redraw them tomorrow if necessary, but it's still respecting both these trend lines, both the 4-hour and the daily support trend lines, which is very very interesting. Unless that's my 4-hour trend line, in which case it needs to come out here. But we'll do that tomorrow. Japanese yen. And here we have the speech, and got a lot of, it's right here in this middle of this buying activity area. Right at 147 is where it closed, looks like. All right. Well, it's not that thing's not going to tell me. 147, I had my trade set at 148.90. So, came down a big chunk. Let's see. So that might be a buying opportunity right there. And British pound versus the yen, because the dollar is on the bottom against that, it went up to 135.26. Big boost for the Great British pound. Pretty much unfazed. Not really phased at all, based on what happened in the United States, because the Great British pound versus the yen, not really a whole lot going on there. That would have been affected. The USD is not involved in that cross. The Aussie even went up 20 pips, 20 to 75 pips. That's not a bad, wouldn't be a bad day either. And then after that, we've got the UCAD right here. That was our other one that we thought we're going to see it break out to at least 140.5, but it did not. Instead, it tanked down to 138.21, and it's also respecting the trend line. So we need to kind of think about coming in at a buy at 138.38 is what I'm thinking now, and the same thing with the yen, coming in about 140. So 149 there, the other one. 29, 30-ish. So we'll take a look at that again on Sunday night when the markets open, tomorrow night when the markets open, and I'll make a decision then. I may make some additional trading decisions tomorrow night, usually probably about 8 o'clock. And then after that, we have, that's about it for today. Oh, wait a minute. The other thing is real fun. A great big spike in gold. How about that? Well, it's not a great big spike. I think I have my, well, stretched out more. It'll be a pretty big spike. But at any rate, what's it, about a $50, about a $30 jump in the price of gold. So that's also interesting that when we cut rates in the United States, gold goes up. And gold is screaming a warning right now about fiscal policies. And what that warning is, I'm not quite sure yet. One thing it is certain is that our debt to GDP ratio, that's getting into the fundamentals of things, and we're not going to talk about fundamentals. But other than that, because I don't want to talk about fundamentals anymore, I don't care what's going on. I want to read the charts, and that's how I'm going to make my money as a technician, not as a fundamentalist. So with silver's took a big spike yesterday too. So that's where we are. Metals up. USD driven currency crosses down, and we will see what happens tomorrow. Maybe able to move these trades down, get them into a profitable range, and get back to making some money. But other than that, that's all I got for today. Watch football today if you want to. I've got to go to my day job, but you guys have a great day, and we'll have more tomorrow. Talk to you later. Bye.